Trading Market Technicals morning call video for Monday, October 21st. Another big update in the markets on Friday. Dow up 28, S&P up 11, NASDAQ up 51. Big day also from Google, Chipotle Mexican Grill, all exceeding earnings. Now, earnings has not been as good as everybody anticipated, although we did have a selective few big names that have been reported and did well. This week is the biggest week for earnings, so we shall see a lot of big key stocks are reporting. So we're going to see if this trend can continue. Now, markets have literally been insane. We're up well over 5% in the last, I think, 7 or 8 trading days, and we would not be looking to add any positions here. I think risk is to the downside. I'll show that to you in the chart segment as well as our indicators. Can the markets push higher? Absolutely. Am I advocating a short here? No. Unless I would definitely be hedging a portfolio unless you're willing to ride any pullbacks. But aside from that, I would not be looking for any type of shorts unless we are shorting stocks that have relative weakness to the market. That's a different story. But I would not be looking just shorting and looking to pick a top here. Markets are crazy, as you can see. One week they don't like them, the next week they're buying them up again. So, and that's going to be due to obviously high frequency trading, algorithms. Welcome to the new era of trading. So just keep that in mind. I would not be adding any new positions here to any swing trades or any long-term trades. You're definitely going to get an opportunity for a pullback. So let's go take a look at some of these indicators here. We have right in front is the stocks above the 50-day moving average at 83%, guys. This is well overbought. You can see this in our indicators here as well. RSI not so much. Stochastics at 100. This is also an area where we have been selling. Every time we get to these areas here, we've had a big sell-off, as you can see. Sell-off, you could see here. So this is not a spot to be adding for any new longs with stocks above the 50-day moving average. NASI Weekly went on a sell signal, as you can see here. Went on a sell signal last week on Friday, was up about 5 weeks, now went on a sell signal. So again, a word of caution. New York Stock Exchange Summation Index also went on a sell signal. So this is something that not to look to go out and short the market. Let price dictate where the market is headed, and if price does break, I'm making lower lows. And I think price is going to need to really break 1720 in the S&P on a closing basis, the E-minis, if we are going to move lower. Let's take a look at the bullish percent SPX. This is still on a buy signal, but however, we're getting into these areas here where markets tend to roll over. And if you can see here in the SPX line chart, we have now exceeded and have made new all-time highs. So again, just a word of caution. And also, let's take a look at the VIX. Now, the VIX did not quite get below the Bollinger Band, but it is at our yearly support. So you have to be careful and use caution here. Same thing like when we mentioned when the S&P, the VIX was here last Wednesday, I believe. Not the past Wednesday, but the October 9th. I said use caution. Looks like we might be getting a buy signal in the market. So same thing, vice versa now. So use caution here. Sellers might be willing to start selling some stocks here. Take a look at the CBOE, another one telling me we have extreme complacency. This is not good when you have the boat filled on one side, everybody bullish. That is not a good sign. So when you're at here closing just about the third time down in these areas, you got to be susceptible that we're going to have some sort of a sell-off. Now, let's take a look at this AAII bullish sentiment. Now, this here, when you get to these levels, you have to really be careful here, guys, because now this is also is telling us 46.2% of investors are bullish. This is the highest levels reported since mid-May. Okay, and then every time we had May, July was another one. September, stocks dipped right after that. So again, just use caution. I'm not saying that to go out and short the market, but this is a spot where a lot of let's say sellers would like to step in, and especially when you have something like this. Also, is the tick. Tick actually read 1100 in the tick reading. When you get to that point, you got to be very cautious here. And also, we closed at 310. Okay, this isn't end of day tick, but when I start seeing spikes like this, to me, if I was long, which I'm not, I would be looking to tighten up stops here. Okay, so I would be looking for either buying some protection, puts it extremely cheap right now to hedge the long portfolio, or if you are willing to ride a pullback and thinking that's just going to be a shallow pullback, then that's another story. But again, if for the day traders, I'm looking for some sort of a pullback. I don't know how deep we're going to get the retracement, but I'd be looking for some sort of a pullback here in the coming days, next couple of days. Here is the bullish percent ENER energy. We got to be careful here with the USO. Again, I'm not looking to buy short USO, but we do have a head and shoulders pattern here. I'll show that to you in the chart segment. Head, left shoulder, right shoulder. Here's your neckline. We are now at the elevated right around the 75, 80-ish area. So, again, an area where we could see further declines in the USO, as well as, obviously, WTI crude. But I am looking to see where this thing goes, but 35 area, right up in this area here, would put me in a better spot to be long. I'm not looking to short oil. I'd be a better long player in oil here. So let's go right into the chart segment. I can show you here. Here's the neckline that we were talking about, USO. Here's the head, left shoulder, right shoulder, and here's where I would be looking to really buy. Right, 35.28, which is the 200-day moving average. That'll coincide nicely with this area here. So this is the spot where I'd be looking for a first spot of a long shot. Now, if we break and close below that, then I think you're going to see further downside here in USO and, of course, crude. Take a look at gold. Now, gold had a nice oversold bounce. Kind of broke the bearish symmetry pattern here of lower highs and lower lows. Now we're breaking back above it. But I think gold can really, if we take out the GLD here of the 50-day moving average, I think you're going to see higher prices. That's why I like shorting gold back into these areas here. I think gold is obviously in a bear market, and I think we can probably see a good short right up into this area here before we look to go lower. Now, if we fail and we get back below this trend line, then I think that this gap will get filled, and I think this little cluster will be taken out and at least get a shot at taking out this area here from June 28th. So again, a word of caution. I wouldn't be looking to short gold here. You can if you could take out the previous day low, if you can, but you're gonna have a tight stop on here. So easy to manage if you're looking to get a short play. But to me, I still think this whole little area here is not risk reward. I'd rather be short up here or break a better short below this area, get back underneath the trend line for a day or two, and put on a short position. Now, get a couple of emails. Where do we mark? Where do we go? What do you think? Well, I think we're at resistance here. This is the E-mini S&P daily chart, and this is the future. So we just took a previous high to low on Fibonacci retracement, and we get a 1272 extension at 1750, 1751.21. We actually made a newer high in the overnight session last night at 1741.25. We took out Friday's high. And now the S&P is up about 75 cents. The E-mini is up about 75 cents. You can see here. So we are really we're getting close to being our targets. I mean, we're about 8 handles away to the 1272 extension. That is, I think it's going to be at least call a top here for now. Doesn't have to. I think the markets can go much higher, obviously, if it wants to. But this is the target area. This is an area here where you're coming into the target area, the 1272 extension. I would be tightening up stops. Now, if we start breaking Friday's low, then I think you might have a little bit of further downside correction here, and at least a local top is in place here. Okay, but not until we take Friday's low out and at least consolidate. Let price tell us where it wants to go. So here is our top, 1751 in the minis. This is what I'm looking for. And if you see here, if you can anyway, here's the 8. We're really extended. We're about, we're about 30-something points away, 25 points away from the 8 EMA. Logical would be a pullback to that, and then we would obviously reevaluate it, okay? But this is what I'm looking for. This is what I was telling to use caution here. Now, here's the monthly chart of the spiders. As you can see, the monthly chart of the spiders, we are at our long-term trend line here. And put that right there. as you can see here. And what do we have? We have a bearish rising wedge. Obviously only bearish when we break the lower trend line on a closing basis. But again, we are at extensions. We are at our long-term uptrend line on the monthly chart. Just a word of caution. The weekly chart, bearish rising wedge on a weekly. We are hitting the upper trend line. Again, we have our indicators, our momentum indicators, which are at overbought levels. And you get to the daily chart. And here you go in a closer view. We have our long-term uptrend line in red from the March 2012 lows. And then we have our trend line here, which is the bearish rising wedge. So we have confluence area of resistance, and being up for 8 days in a row, up over 5%, would tell me to be caution, and risk would be to the downside. Here is the diamonds, same thing. Diamonds reached its long-term uptrend line from March 2012 lows. I'd be tightening up stops. IWM, the leader, doing fantastic. And I might say, and I definitely want to point out this. Let me just show you this here real quick. This I borrowed from Stock Charts. They're great. They got some great charts that you can really dial down and do many things with. Here's the leader. Clearly, financials have picked up the momentum to the upside, and I've mentioned that the financials were lagging a few weeks back and really need to start taking a leadership role, and it is in fact doing so. So where I think that we are way overbought right now, in the longer term picture, 3 months out, 6 months out, the markets look fantastic. We have our energy, we have materials, you have industrials, technology, S&P in itself, cyclicals. Everything is pushing the markets along, especially when you find the financials that are leading. And that's really important. That's why I wanted to stress, in the longer term picture, guys, the markets look good. And even though you might not think the market should be at these levels, if it's the Fed accommodating and buying treasuries and putting money back into the market, you cannot fight the Fed. And part of the reason why we had the also explosive move to the upside is since we had the government shutdown, October was supposed to be the tapering of QE. Well, it looks like it's going to be postponed. And that's where we had continued movement of money in the markets, and everybody has a risk-on mentality. And that's why we have the markets making new highs again. I think it's frothy. I definitely think the markets are a bit ahead of itself. However, it's not what I think. It's what price is telling us and how we make money in trading. And here's the IWM just to let you know. Leader also making new highs. Transports did well, took out also new highs. So here you can see everything's running on all cylinders here. Goldman. Now, Goldman lagged, obviously, because of their earnings report. Now, if Goldman could get back above 160, I would be absolutely looking for a long play in Goldman Sachs, especially when the banks are that strong. I'd be looking for a long play with your stop just below this area. Or wait to see where we go from here. If this market can, if Goldman does dip lower one more time, you might have a better shot at the 200-day moving average. I don't think that's going to happen. I think Goldman is going to probably chop in this little sideways consolidation and then break to the upside. Easy to manage. I do like Goldman. Aside from its earnings, I do like Goldman to the upside once it breaks 160. And here's the XLF, just showing you how big move to the upside, gained momentum, and started playing its leadership role. Then we have Apple. Apple did quite well here. Apple at that 495 break, we took our first target. Next target's going to be 419, 420. Again, Apple could use a little bit of a consolidation pullback, maybe sideways consolidation before it makes another move higher. But again, Q's, great help from Google. As you can see, a big explosive move, all-time highs, making new highs here. So everything is going on all cylinders, guys. But not that I'm looking to advocate a short. I wouldn't be looking at a short. Day trading is tough when your markets are running on all cylinders and you're looking for something to do. And every time the markets gap up, stocks get to be that pricey, and it's a little difficult. However, if we're looking for plays, look for the best plays. And if you're looking to look for something to short, look for weak stocks, short relative weakness to what the markets are doing. If you can't find, if you can't get a stock to find an entry, be very careful. But again, guys, I think risk is to the downside for the next couple of days, and then we would reevaluate it. Let's see what happens. Futures are now up about 75 cents from making a pre-market high of 1741 and a quarter. So we shall see. We have earnings from Netflix. Take a look at your earnings calendar, guys. Make sure you're not holding anything. Could be detrimental to your trading account. Have a great day. We'll see you guys tomorrow. Take care.